Hello traders, how we all doing today? Hope you guys are all having a great weekend. And what a week it's been on SPY this last week and for the market overall. Big announcements from the Fed. We also got on top of it, beat on tech earnings but down guidance, but overall led to a bullish reaction. Apple recovered mostly all of the losses it made after market after earnings, so that was a very bullish sign. But we're going to be doing something a little bit different today. What I'm going to be doing is I'm going to be going over some trading psychology tips that's helped me so far. Now, keep in mind that I'm not yet profitable, but I am well on my way to getting there. But this is just what I find and what has helped me so far. But without further ado, I'm going to get right on to it. So, do not think about the outcome of each trade. Instead of focus on the process of each trade. So, kind of the idea behind this is instead of focusing on the outcome of whether or not you're going to be the next trade is going to be a winner or the next trade is going to be a loser, think about what led to that trade, that winning trade being a winner versus your losing trade being a loser. Now, the big mindset shift that I took on this one was that you have to really disconnect from the money. You really can't think in terms of, oh, if I make this, then I could buy this, or if I lose this, that means I lost this. You can't have an attachment to the money. You kind of have to be on a more of a disconnect basis with it, because then you're going to get your emotions tied up with the money if you start thinking in terms of, oh, I lost this. Instead of think in terms of that each trade that you take, as long as you're taking your trades on a technical basis that puts the edge in your favor. So if you have a strategy and you believe that your strategy gives you an edge, instead of focusing on the outcome on a trade by trade basis, instead of think more long term, think in the long run. So if you focus on taking only A plus setups, only setups that fit your criteria 100%, and you stay disciplined and consistent to that, then over the long term, that those probabilities are going to compound into your favor. You're not going to win every single trade you get into, but that's why you have proper risk management. That proper risk management is going to end up saving your butt later on down the road, because that's what's going to allow for the probabilities to work in your favor. And the other thing is, and I'm sure all of you guys know this, but 80% of trading is psychological and 20% of it's technical. So a good example of this is that think about, and I'm sure you guys have all had this happen before, think about a trading setup that came about. Your strategy showed that you had an edge here in the trade, and you went to go place a trade, but you hesitated for a second, or you got so worked up about getting nervous that this trade could be a loser that you ended up then taking the trade, or you got into the trade and you said that you're going to sell out at break even, and then you end up selling out for a little bit of, and you still had a little bit of green left, a little bit of profit, and you end up selling out short, only for the trade to go into your favor afterward. So those are all psychological issues that you're experiencing with trading. You have to be able to work through that instead of thinking about, and again, it always comes back to the attachment of money at the end of the day. You have to think about the quality of the setup that you're taking. So what really helped me with this is, in your morning plan, start to put in if-then statements. So an example would be, if I get a 5-minute close above the support or resistance level, then I will do this. That way, if you create a very detailed plan around your strategy and you put into if-then statements, and you have that market plan in front of you, you're more than likely, or at least you have a higher probability of sticking to that if-then statement plan than you would if you just were thinking on plain emotions. Now, when you do an if-then statement, it takes out majority of the emotions. And I shouldn't say a majority. It takes out some of the emotion behind trading. There's so many emotions that come up when you're trading, and at the end of the day, a lot of the trading that you guys do, I'm sure you experience this because I know I have. A majority of it comes down to psychological issues rather than your technical strategy being flawed. So you might have the edge, but the psychological aspects of the trade end up getting in your way rather than the technical aspects. One last thing I would want to mention is that, in my opinion, there is no such thing as a losing trade as long as you can learn from that losing trade. And you have to have the mindset that each losing trade that you take, as long as you're doing proper position sizing, so I suggest doing the smallest you can, whether that's one share, one contract, if you're trading options, doing one contract, if you're doing common stock, one share. So that way you have very little emotional attachment to the money in the first place. But then think of each loss as a tuition payment to Trader University. I know I heard one trader say this one time. I don't know I forget his name. So if you guys could leave that in the comments, that'd be great. But I remember I heard it somewhere at one point in time that each losing trade is just another payment to Trader University. Essentially meaning that as long as you reflect on your trades and you journal your trades and understand what made a winning trade a winning trade, what made a losing trade, then what it ends up doing in the long run is it saves you a lot of money because you're learning in the moment with small amounts of money what led to these mistakes, what led to these errors, how can I perfect my method, how can I perfect my strategy. Then when you start to get that consistency down, then all of a sudden it you use the same exact strategy that you perfected with smaller size. Then you increase your size once you're consistent. And if you just execute the same exact way, which is a lot harder said than done, but I'm saying in a general sense, if you execute in the same way, you'll end up doing very well for yourself, and you'll end up making quite a bit of money in the process. And you will also be, in terms of emotions, relatively calm when you do it because you have the confidence to back up all the work you did with that. But at least from a psychological perspective, I just wanted to mention some of the things I've noticed that have helped me, share them with you. But now we're going to go over the technical aspects, like usual, about what I'm watching this week. So the first thing to watch is going to be on Tesla. So let's go over to the weekly chart. So on the weekly chart, big thing to watch on here is, as I've been saying, that the symmetrical triangle end up breaking down. We end up coming downward quite sharply. But the big thing is that we're bouncing off this 200 EMA, considering that you also have Apple doing pretty well. It recovered nicely. Microsoft, it's also very bullish at the moment. We might get all-time highs this week or next week if everything goes according to plan. As you know, with the market, things can go from 100 to 0 real fast or 0 to 100 real fast. So just keep that in mind. But the big thing is that we're mounting the 200 EMA on Tesla. Now, I would really watch this 243 level. If we get a retest at 243, that might be considered a retest for the symmetrical triangle, then a push downward. Or what this could be is, it could be a false breakdown and it ends up pulling, well, I should say breakdown, but it could be a reversal. Because if it was a false breakdown, it would have reversed right now to the upside. But it didn't. So I would watch the 243 level. I would expect some short-term upside on Tesla. Now, let's just say hypothetically it doesn't. I would watch this 200 EMA, and then I would also watch 191 on Tesla. Next thing that we're going to be going over is Microsoft's. So the big thing on Microsoft is that it looks like we're shaping up for all-time highs pretty soon. So the big level now is going to be 366.78. On the weekly, we closed above the 351 level. Now, the only thing that I have against Microsoft is we have this huge move upward right here. As you can see, big move up. But look at the volume on the week. It's the same thing as these tiny little candles right here, but you have a massive increase in price. Personally, I'd be a little cautious on Microsoft, and I believe that's the same thing with all the other big holders. I believe that you have this pattern of very low volume. So I'm not really buying this rally personally. I think it's going to come snapping right back. Just my personal opinion, but just keep in mind the volume's a little bit on the low side, so I'm not really a big fan of that. But the next one that we're going to be going over is Apple. So hypothetically, I just drew this in. I know it's not a perfect bull flag, but there's a possibility that Apple is flagging for a move higher. It's really hard to say, and I don't know if I mentioned this, but I bought Apple stock at 176 the other day. Or actually, yeah, 176 I bought it for. So I bought some Apple stock before earnings, then all of a sudden it came right back down. I'm not really worried about it personally, because I know in the long term Apple is going to be very good, and this is just a long term buying opportunity. Personally, that's the way I saw it. Plus, it was with a very small position size, so I had it hedged out with my McDonald's position. But the big thing to watch on Apple is going to be the 179, 190. If we push upward, now if we push downward, what I would really watch is the breakdown of 168 and 156. If that ends up happening, we push downward. But I just thought it'd be worthy to mention on Apple. Now, Apple, we do have increased volume, as you can see here. Not by much, but I mean it's by a decent amount where it supports the upside move. But that could also just be because of earnings. So it's really hard to tell with Apple. I think this is mostly just because of the earnings that came out this week. That's why the volume's a little higher. But that's what I'm watching there. Now NVIDIA. So a big thing on NVIDIA is going to be to watch the 468 and 500 level. As we know, NVIDIA has a tendency to really push, so I'd watch 468 and 500. Now, if we end up going downward, then I would watch the 405 level as usual. Now, the big thing is on NVIDIA is that, as you can see here, volume was average, nothing great, but we did a massive push up. It was the same thing as on, what was that the week of? 1023, or even a better example would be 925. So I'm not really buying it on NVIDIA either, that this is a legitimate push. But, you got to trade what the market tells you. You can't trade what makes sense. You just got to trade what the market gives you. Because at the end of the day, the markets don't make sense 90% of the time, in my opinion. But if you can make money off of it, so be it. Next one that we're going to be going over is SPY. So the big levels I'm going to be watching on SPY for this week are going to be 425, 433, 437, 440, and 444. These are all levels in play. If we continue to get a push upward, then I would really watch 437, 440, and on the real upside, then 444. If we end up snapping back, I would watch 425 and 422, and as if you go on to the daily chart, we got a bunch of gaps. And as we all know, as traders, we also have this gap right here that was not 100% filled. So we could push upwards, fill this gap right here at 430. What is that? 439. We'll call it 438. At 438, and then you can get a push downward from there, a really sharp decline. But it would not shock me because it's within trend. But at the same time, I would just trade what the market gives you at the end of the day. But that's what I'm going to be watching on SPY. Next one I'm going to be going over is McDonald's. So, big thing on McDonald's is technically you do have a bear flag right here. You could consider that a bear flag, possibly a very sloppy one, but you could consider that a bear flag, maybe. But let's just say hypothetically it is, and it snaps back, then I would watch 262 and 254, but this looks very bullish in my opinion, so I'm going to be watching 269, and then my upward target for this week would be 276. Now, I still have about 100 shares of of McDonald's. I have 100 shares of McDonald's. I have about, I don't know how many shares I end up buying of Apple. I know I bought $2,000 worth of it, though. But that's at least what I'm going to be watching for this week. And if you guys like the content, like the whole train psychology speech in the beginning, appreciate if you guys could subscribe, like, comment. It would be greatly appreciated. But good luck, traders.